Have you ever wondered how different classes of people handle a lump sum of money? It's a question that may have crossed your mind, especially when stories of lottery winners going broke are all too common. On the other hand, we hear tales of the wealthy growing their fortunes with what seems like a Midas touch. But what about the everyday middle class? How do they navigate this financial landscape when presented with a windfall? This question isn't just about curiosity, it's about understanding the strategies and mindsets that can either lead to financial prosperity or plunge one into monetary ruin. It's about learning from the triumphs and pitfalls of others to make informed decisions when you find yourself staring at a large sum of cash. Intrigued? You should be, because in this video, we'll explore the strategies of the rich, middle class, and poor when they receive a lump sum of money. We'll delve into the world of investments, savings, spending habits, and financial advisors. So, buckle up and prepare for a journey through the world of money management. Who knows? The next lump sum you handle might just be the turning point to your financial success. Imagine you're a millionaire and you've just received a large sum of money. How would you manage it? Perhaps you're picturing a luxury vacation, a new sports car, or maybe even a yacht. But for the wealthy, their approach to handling a lump sum is strikingly different. Rather than splurging on lavish items or experiences, they typically focus on investments that can further grow their wealth. One of the most common ways the rich invest their money is in the stock market. They often put their money into well-established companies, or diversify their portfolio with a mix of stocks, bonds, and other financial instruments. But it's not just about buying and selling shares. The wealthy also make use of financial products like ISAs, or individual savings accounts, which offer tax-efficient ways to save and invest. They might also consider a self-invested personal pension, or SIPP, which allows for more control over investments and offers tax relief on contributions. Real estate is another popular choice for the wealthy. They often invest in rental properties, commercial real estate, or real estate investment trusts, also known as REITs. These investments provide a steady income stream in the form of rent or dividends, while also offering potential for capital appreciation. And let's not forget about businesses. Many wealthy individuals invest their lump sum into their own businesses or startups, knowing that the return on investment could potentially be much higher than other forms of investments. Cryptocurrency, despite its volatility, also attracts the attention of the wealthy. They understand the risks associated with it but also recognize the potential high returns that could be reaped from a successful crypto investment. But regardless of the specific investment, the wealthy understand the importance of diversification. They spread their investments across different asset classes to minimize risk and maximize potential returns. They also think long-term. Instead of seeking quick profits, they aim for steady growth over time. So, the rich aim to grow their wealth by investing in assets. But what about the middle class? Stay tuned as we delve into how the middle class handles their lump sum in the next segment. Now, picture yourself as a member of the middle class who's just received a hefty bonus. What would be your approach? As you mull over this, let's dive into the common strategies adopted by the middle class when handling a lump sum of money. Firstly, the middle class often grapples with debts. It could be a student loan, a mortgage, or credit card debt. So, when a lump sum comes their way, their first instinct is often to pay down these debts. It's like a breath of fresh air, an opportunity to alleviate the burden of monthly payments and save on interest. Next, we have retirement accounts. The middle class understands the importance of preparing for the golden years. As a result, they often channel a portion of their lump sum into retirement accounts like 401(k) plans, IRAs, or self-invested personal pensions. This not only provides a nest egg for the future, but also brings with it tax benefits. Now, the middle class isn't just about playing it safe. They also recognize the potential of their lump sum to grow through investing. They may not go all out into volatile markets, but they do dip their toes in. This could involve investing in stocks, real estate investment trusts, or even dabbling in cryptocurrency. But remember, they do this with a sense of caution and a clear understanding of their risk appetite. One important aspect to note is the role of financial advisors in guiding these decisions. Middle-class individuals often seek advice from financial planners to help align their lump sum with their existing financial plan. This can be crucial in optimizing the potential of the lump sum and minimizing taxation. Finally, there's a balance between living for today and planning for tomorrow. So a portion of their lump sum might be set aside for current needs and wants, like home renovations or a well-deserved family holiday. The middle class tends to focus on balancing their current financial needs with future stability. But how do the poor handle a lump sum of money? Let's find out in our next segment. Lastly, consider how a poor person might handle a windfall. What might they do differently? It's a question that takes us down a path less traveled, yet filled with vital lessons. We've discussed how the rich and middle class might handle a lump sum of money, but what about the poor? Often the poor are faced with immediate needs or towering debts, and a sudden windfall is seen as a lifeline. This could mean using the money to pay rent, buy groceries, or cover medical bills. Their focus is on survival rather than long-term financial growth. In many cases, a lack of financial knowledge or resources might mean that they don't have the tools to make the most out of their money. They might not know about investment options or even understand the concept of interest and how it can work for them. This isn't a reflection on their intelligence, but rather a symptom of a system that often fails to provide financial education to those who need it most. Moreover, the poor are often subjected to predatory lending practices. Payday loans, for example, are short-term loans with extraordinarily high interest rates that can trap a person in a cycle of debt. A lump sum of money might be used to pay off such a loan, but without a change in circumstances, they may find themselves needing another loan soon after. There's also the emotional aspect to consider. For someone who has lived with scarcity, a sudden influx of money can feel overwhelming. They might be tempted to spend it quickly, fearing that if they don't use it, they'll lose it. This mentality, unfortunately, can lead to poor financial decisions. The poor often struggle to make a lump sum last, highlighting the importance of financial education for all. It's not just about knowing how to invest or save, but also about understanding how to navigate the financial landscape and avoid the pitfalls that can lead to further hardship. This is a lesson that transcends class and income because no matter how much money you have, understanding how to manage it is key to financial stability. So, what can we learn from these different approaches to handling a lump sum of money? Firstly, the rich often prioritize investment, knowing that their wealth can work for them. They view lump sums as opportunities for growth, not just immediate gratification. They invest in stocks, real estate, and even in their personal businesses. This strategy is about long-term prosperity and building generational wealth. The middle class, on the other hand, tend to balance between savings and paying off debts. They're aware of the dangers of high-interest debt and strive to reduce it. They also see the value in creating an emergency fund for unexpected expenses. This approach is about security and stability. Lastly, the poor often spend their lump sum on immediate needs or wants. They might use it to pay off debts, but without a strategic plan, they often find themselves back in debt. This cycle can be broken through financial education, which is crucial in understanding how to manage money effectively. These approaches show us the importance of having a plan when receiving a lump sum. Whether it's for investing, paying off debts, or creating an emergency fund, having a strategic approach can significantly impact your financial future. It's not about how much money you have, but how you manage it. Whether you're rich, middle class, or poor, understanding how to manage a lump sum can make a huge difference in your financial future. Now that you know how different classes manage their lump sum, what would you do if you received a bonus this coming Christmas? It's a question worth pondering. Financial strategies vary from person to person and from class to class, but the goal remains the same: to secure our future and make the most of our present. So, whether you're part of the rich, the middle class, or the poor, it's crucial to think about how you want to use any lump sum that comes your way. Do you want to invest it in stocks, real estate, or perhaps a personal pension? Or would you rather use it to pay off debts, start a health savings account, or simply build up your emergency fund? Remember, it's not just about having money. It's about using that money wisely. So consider your financial situation and your long-term goals. Align your lump sum with your existing financial plan. Don't hesitate to seek advice from financial planners, and take the time to learn about different investment strategies. If you found this video helpful and want to learn more, please subscribe to our channel. We look forward to helping you navigate your financial journey.